They didn't build marble buildings. They didn't hire smiling tellers or open corner branches. There were no vaults, no leather chairs, no banker hours. What they built was code. An app. A digital weapon aimed straight at the heart of traditional banking. This is Revolut, the bank with no buildings and no borders. Born in London, raised by disruption, and now worth over $33 billion, Revolut didn't slowly climb the financial ladder. I hacked it. What started as a tool to save money on travel FX fees became one of the most ambitious financial platforms the world has ever seen, offering everything from crypto to stock trading, budgeting to business accounts, all in a single super app. But with speed came scrutiny. As Revolut raced across countries, added users by the millions, and applied for banking licenses, regulators began to worry. Was it growing too fast? Was it even safe? And what was really happening inside this secretive, high-pressure fintech? Because behind the sleek interface and glowing reviews, there are stories of burnout, broken rules, and blurred lines. The truth is, Revolut didn't ask how banking should evolve. It asked something more radical. If we were building banking today, with no history, no rules, no limits, what would it look like? Before Revolut became a $33 billion behemoth, it was just an idea born out of frustration, the kind every traveler knows too well. Nikolai Storonsky, a Russian-born former trader at Credit Suisse, and Vlad Yatsenko, a Ukrainian developer, were no strangers to the financial world. But what annoyed them wasn't a crisis on Wall Street, it was something simpler: foreign exchange fees. Every time they crossed a border or swiped a card abroad, they watched their money quietly vanish, eaten alive by hidden charges and bad exchange rates. Banks were making billions from these small, silent fees. And no one was challenging it.
You know, it's something most of us do nearly every day. We swipe. We take our cards and we swipe. It's quick, it's convenient, but it could be costing you money. And you might have seen signs already at businesses saying that you will be charged to make that swipe. So we looked into this, and we had a big question, of course: is it legal?
In 2015, Revolut launched with a single purpose: kill the hidden fees. No branches, no fluff. Just a sleek mobile app and a prepaid debit card that let users spend globally at interbank exchange rates. Revolut didn't grow like a bank. It grew like a startup. They gamified the waitlist, built buzz through social media, offering instant rewards for referrals. The app became a trend, not just a tool. Within months, they had hundreds of thousands of users. Within a few years, millions. And they did it all without opening a single branch. Traditional banks spent billions on real estate. Revolut just pushed updates. Revolut let you open an account in minutes, from your couch. It was banking for the smartphone generation. Frictionless, global, borderless. But behind the simplicity was a master plan to build more than a bank. Revolut wasn't just solving one problem. It was laying the foundation for a financial super app, one that would soon offer crypto, stocks, budgeting, insurance, business accounts, and beyond. This was no longer about saving on travel money. It was about replacing your bank. And it worked. Today, Revolut serves over 50 million customers across more than 48 countries, processing over 500 million transactions every month.
So, yesterday you announced your 50 million customer mark. Congrats on that amazing achievement. Last year you announced more than $2 billion in revenue, more than £500 million, and more than two.
Revolut has grown faster than almost any traditional bank, and it did so without opening a single branch. In the global neobank race, it now leads the pack, with more users than Monzo and N26, and faster growth in key markets like the US compared to Chime. In the UK alone, Revolut had nearly 9 million users in 2023. At its peak valuation of $33 billion, Revolut surpassed the combined worth of Monzo, Starling, and N26, briefly becoming Europe's most valuable fintech. But Revolut isn't trying to become the next HSBC or JP Morgan. it's carving out a new category altogether. In doing so, it's not just disrupting legacy banks like Barclays and Lloyds, but also competing head-on with other neobanks, fintechs, and digital giants like PayPal, Robinhood, Wise, and Cash App. In the UK and much of Europe, it's not just an alternative, it's a dominant force in digital banking. While legacy institutions spend billions maintaining physical branches, Revolut reaches users from London to Tokyo through nothing more than an app. And with plans to expand deeper into the US, Latin America, and Asia Pacific, Revolut isn't just disrupting markets, it's building them from scratch.
Let's just talk about where you go next. So as Vonnie just ran through a whole list of things that you're doing, but as you said, you're expanding pretty quickly. What's next?
Well, we have a big focus on expansion. So obviously US, we launched Australia recently, we're launching Singapore, we're launching Canada and Japan this year. And then next year we're looking at India, more Asian markets, and Latin America as well.
Revolut didn't stop at being a digital wallet, it wanted to become your entire financial universe. Soon after gaining traction, the company began adding layer after layer of functionality. Users could now buy stocks, trade crypto, order metal cards, set up savings vaults, and even manage travel insurance, all from one place. The goal wasn't just convenience. It was complete immersion, a financial ecosystem where every service pulled you deeper in, increasing your dependence on the app. Revolut wasn't acting like a traditional bank. It was moving like a tech platform, launching features at breakneck speed, testing them live, updating constantly. To operate as a real bank, Revolut needed licenses, and not just in one country. It pursued licenses in Lithuania, the UK, and across Europe. And that's where things got complicated. Because banks don't just need users. They need trust, compliance, and risk control. All things Revolut hadn't built for at startup speed. Governments began asking sharp questions. Was this really a bank, or just a slick app playing one? In the UK, Revolut's banking license application was delayed for years. Lithuanian regulators also flagged issues in audit trails and compliance systems. Internally, the company faced mounting pressure to scale up its legal, compliance, and risk management teams fast. Former employees raised concerns about weak internal oversight, delayed audits, and inconsistent reporting. And while Revolut was growing in public, behind the scenes, customers were raising red flags too. Dozens of users reported having their accounts frozen during anti-money laundering checks, some locked out for weeks without warning or support. Reports emerged of tense moments with regulators. Revolut was told to slow down, tighten up, and act more like a financial institution, not a Silicon Valley startup. Because when you're holding millions, sometimes billions, in customer funds, you need safeguards, stress tests, protocols, and accountability. Revolut's real challenge had arrived. Could a company built on speed adapt to a world where slowness is safety? Revolut may have reimagined how banking looks, but behind the screen, it's still powered by people. And inside those walls, things weren't always as sleek as the app itself. As the company scaled across continents, cracks began to show, not in its technology, but in its culture. Former employees spoke of long hours, high turnover, and relentless pressure to hit impossible targets. At the center of it all stood CEO Nikolai Storonsky, admired for his relentless intensity, but criticized for building a workplace where grind came before balance. To him, speed was survival. But for many inside Revolut, speed felt like burnout. But the pressure wasn't only internal. In 2024 and 2025, a wave of user complaints hit the headlines. Frozen accounts, poor support in resolving issues, even for legitimate customers. On Reddit and in media reports, freelancers, business owners, and regular users described being locked out of their funds with no warning, and getting nothing but chatbot replies. One UK customer was awarded compensation by the Financial Ombudsman after Revolut froze their account, deducted funds, and failed to respond. Revolut claims these measures are part of anti-fraud compliance. In April 2025, Revolut was hit with a €3.5 million fine by the Bank of Lithuania, the country's largest ever penalty for anti-money laundering failures. Inspectors found systemic deficiencies in how Revolut monitored its business relationships and user transactions. It wasn't just a compliance miss, it was a signal that Revolut's internal systems hadn't scaled to match its global ambitions. For a company that holds banking licenses and manages billions in user funds, the ruling was a red flag and a warning shot from regulators. Revolut didn't rely on interest from loans or costly branch networks. It monetized through premium subscriptions like Revolut Metal, foreign exchange spreads on global transactions, crypto and stock trading commissions, and interchange fees earned every time users swiped their cards. But not all revenue streams came without risk. Revolut's early embrace of crypto, while profitable, operated in a legal grey zone across many jurisdictions. This lean, digital-first structure meant Revolut could generate more profit per user while spending far less on overhead, a model traditional banks still struggle to replicate. But underneath all that speed was a cost, not just for regulators, but for the people building the platform. Because a company built for velocity often struggles when it's forced to slow down, Revolut is now growing up in a world that demands controls, transparency, and long-term trust. It promised users freedom from traditional banking. But now, it must survive within the very system it once sought to disrupt. The road ahead won't be about product releases or flashy features. It'll be about earning something far more difficult. Because in the end, Revolut didn't just challenge how banks operate. It challenged the very definition of what a bank is. And now, the world is watching to see whether it will become the future of finance. Or another cautionary tale of tech ambition outpacing reality. Revolut didn't just disrupt banking. It reprogrammed it, line by line, feature by feature, country by country. From killing fees to building an all-in-one financial superapp, it promised a future where your entire wallet lives in your phone. But as Revolut expands into the world of regulators, watchdogs, and rising expectations, one question remains. Can a company built on speed survive a system built on caution? Is this the future of finance, or just another fintech shooting star burning too bright, too fast? Let us know in the comments. Do you trust a bank with no branches? Would you go all in on an app to manage your money, your investments, your life? Drop your thoughts below. Like, share, and subscribe for more stories on the businesses rewriting the rules.